of the day. Shane Skinner joins us, Manager of Trader Services at Charles Schwab, to look at some of the levels here to keep an eye on, Shane. So we're getting a nice kind of like grind here to the upside.
Yeah, just a slow, steady churn upwards today. Fairly uneventful. No real crazy movements. That opening range, first 30 to 60 minutes of the day, moved around quite a bit for, to the downside. It caught some support early on, and it's just been, like you said, sideways and up, right, or upwards and to the right, as these days typically go. So bulls have to be happy with the action they're seeing.
Given that we're trading at all-time highs, is there any obvious levels, resistance from a technical perspective, where you're going with like big dealer positionings? Where are the strikes to the upside that are getting active?
Yeah. So I took a look at basically every expiration in SPX from now until the end of the year. And the December 20 expiration on SPX, as well as the VIX 18, the monthlies, right? Just overwhelmingly more open interest in activity going on there than anywhere else. Just some quick numbers, for example. These are today's S&P levels. Expect that 60-15 to 60-20 level to the upside to probably be our max. We might settle back down to 60-10 to 6,000 maybe, but it seems like we're nestled in a pretty comfortable spot. Put to call ratio and volume on the day has not been, it's been very well balanced. It's basically been one. So you're seeing a healthy appetite on both sides of the market. Those are the days that we typically see sideways and, like we said, up.
Seems
so
like we're building
no surprise
support
on that.
at 6K. 6K kind of seems like,
Yeah.
it's no longer a threat. It's maybe acting as a support.
So if you look at the SPX monthly chart, 6,000 is basically the level. Like, there is a massive amount of positioning in SPX calls and puts simultaneously, fairly even too, almost as if there might be a straddle of some sort going on there. And so if we take a look at this chart right here, this is the call open interest from now. Yeah, from now until the end of the year, all SPX, okay? These squares, different colors or different expirations. The only reason why I plotted so many and put this up here was because look at those pink levels. I mean, they take up the whole chart. It's like nothing else is really being traded in terms of the amount of open interest relative to these monthly contracts. So we talk about and emphasize how much the front month matters, or the front expiration can matters in these situations when looking at gamma, especially notionally. But something as far as December 20th from now, with positioning this big, it's having an effect. And so these blue levels are 4,000 and 5,000 respectfully, and you're seeing a similar setup, just sort of flipped on the put side at 4,000 and 5,000. And then the next biggest level is where this green arrow is at 6,000. So it seems like what we might have going on is some kind of a potential collar of some sort, maybe going on down here at 4,000 to 5,000. And then 6,000 is basically the next big level going into December's monthly expiration. So between now and then, expect 6,000 to probably be a very strong level that we seem to stick around. I'm not saying we can't break from it and go lower or higher, but at the same time, the amount of positioning in this stuff right now, the notional gamma at that 6,000 level now is greater for that expiration than any of the other expirations between now and then.
Very interesting. So
you're
a lot
talking
of incentive by dealers and big institutions to keep us there.
Yep. And if you notice too, looking out, it's basically 6,000 is the level, and then you go 50 up or 50 down, and then another 50 up or 50 down in terms of how much gamma is out there to the upside and the downside. And I'm with you. I do see, from what I can tell, the put call ratio in these isn't too skewed to the put side. We're at about 1.5 on the open interest right now as the ratio, and about 1.84 on the volume. So does seem like puts are trading a little more than calls. That doesn't necessarily mean you're going to go to the downside. What's interesting though is when you tie in VIX and VIX monthly expiration and what we're seeing there. VIX has been relatively quiet. It's been, subdued, if you will, for the past couple of weeks, essentially since post-election, right? And we're kind of seeing a drop off here in the monthly position to the downside in the puts. It doesn't seem like anybody wants to really go much lower than 13, where that max put open interest is. And you basically, it's non-existent below that. So to me, if no one's willing to continue to take that put side of the market, and we continue to see all this call side build up here to the top side, I mean, VIX might be something worth paying attention to here in the next month. The max pain level sits at 17.5 when you're trading near, 14 right now. It's not a small move from 14 to 17, and then, the closer you get to 20, the closer it likes to touch. So, definitely something to watch, the VIX monthly and the SPX monthly, as we go into this month, given how much money is on the line there.
Nice, good stuff. Like that perspective. A couple big areas there for S&Ps and VIX that overlap. All right, love it. Give me a thought on CrowdStrike. We do have earnings coming up. I know you're looking at some of the options trading there. It's been quite a comeback story. 60 seconds. Go, Shane.
Yeah. Key focus is the 350 max pain level. That's where we see, again, the most amount of long option holders experience pain, if you will, on both sides, puts and calls, and sort of seems to be the sweet spot sometimes for the dealers to hedge. So 350, keep an eye on for the downside. If that were to give, it's a mixed bag from there to 300. 325 to 330 seems to be sort of the sweet spot. 330 also aligning with the downward move on the market maker move expectation on toss right now. If you're looking upside, you're going to try to get past, 360, 370. If that can break, that max call open interest up at 400 is huge. And going into the day, that's the largest volume as well. Wow. So the question is, did people continue to pile on long options, short options? What have the people creating the volume there been doing today? And depending on that, we could see another situation like Qualcomm, where this thing just goes straight up to that max call open interest level after the earnings report. But if it can't catch enough support once it gets up there, the hedge slowly unwinds back into the other way, and you float back down, right into this sort of 360 to 370 range we've found ourselves in here. So that's sort of the look in either direction.
Seems like the odds are kind of skewed towards upside, but also probably a big hurdle to get across for 400. But it seems like some magnetism on the call side, people itching for a continued recovery. Thanks, Shane. Good stuff, good perspective. Nice look at the levels for S&Ps as well as CrowdStrike.